Hello, good afternoon, everyone. I'm Chris Herbert. I'm the Managing Director of the Joint Center for Housing Studies. I'm very pleased to welcome you today to the release of this year's Improving America's Housing Report. This is a report we do every other year and have done so since 1999. So those of you who are adept at math will know that this is our 12th report in this series. It's one of the signature reports of the Joint Center, and it's been led since its inception by Kermit Baker, the director of our Remodeling Futures program here at the Joint Center. This year has actually, as you all know, been a turbulent year for the country due to the pandemic and other events. The remodeling market, much like the rest of the housing market, has experienced some significant gyrations. And so this year's report will help provide insights not just on the long run trends in the industry, but also the short run trends we faced through the pandemic and what the outlook is going forward from here. Before I go further, I do want to take time to thank ABC Supply, who has been the principal sponsor of this report for the last few iterations. We're very grateful to them for their support. And I also want to thank Kermit Baker, Abby Will, Sophia Wadeen, who are the researchers behind the report, as well as Marcia Fernald and John Skurchak, who are the designers. So we're going to kick off today's event with a presentation of the report findings from my colleague, Abby Will, who is the Associate Project Director of our Remodeling Futures program. And then following Abby's presentation, we'll welcome our panel to discuss the implications of this year's findings for home improvement in the U.S. So Abby, I'm turning it over to you, and thanks for all your great work on this.
Great, thanks, Chris. I'm really pleased to be here today to share some of the key themes from our report. So let me start here with our total market size for home improvements and maintenance and repairs. The pandemic turned out to be something of a boon for the remodeling industry by forcing a variety of housing and lifestyle changes that encourage improvement spending. So the steady expansion of the remodeling market in the years leading up to the pandemic continued in 2020. We estimate over 3% growth in improvement and repair spending on the nation's housing stock, up to almost $420 billion last year. And the pandemic changed some things about the remodeling market, including sources and locations of strength in the market, which I'll touch on in a minute. And the pandemic also accelerated ongoing trends in the market. So further concentration of spending for exterior replacements, for example, roofing, siding, windows and doors, and also outside property improvements like fencing, decking, landscaping. So in the decade or more before 2020, the share of home improvement spending for DIY projects had steadily been trending down from almost a quarter of total spending before 2005, down to a new low of just 17% of total spending by 2019. But in 2020, with so many owners working from home, kids learning from home, certainly with the health concerns about having contractors working inside the home, do-it-yourself projects really surged. So this orange line is retail sales of building materials. That's spending at Home Depot, Lowe's, other hardware, paint stores. And we see that, beginning in May and for every month for the rest of the year, retail sales increased by double digits from the same month a year ago during 2020. So professional remodeling activity measured here as hours worked at general remodelers, they bounced back pretty quickly too after that initial jolt of the pandemic lockdowns, but was much slower to return to any growth last year. And another trend that shifted with the pandemic is location of strength in home improvement spending. Before the pandemic, remodeling activity had been fully concentrated in higher cost, typically coastal metros where, rising incomes and tight for sale inventories were driving house price appreciation, driving up home equity levels. In 2019, the share of total improvement spending by owners spending at least $50,000 was 40% or more in markets like Boston, DC, Miami, Denver, West Coast markets, LA, San Francisco, Seattle. Whereas improvement spending in more affordable interior markets of the country were much less concentrated by those high spending homeowners. But then in 2020, again, we saw that remodeling activity measured here as homes with one or more remodeling permits. It was actually stronger in many of those lower cost metros, places like San Antonio, Louisville, Kansas City, Nashville, Oklahoma City. where larger shares of younger households, and traditionally those are the most active do-it-yourselfers, they could better afford to buy and improve their homes in those markets. And then in less affordable metros with much lower shares of younger owners, we tended to see declines in remodeling permitting last year, places like Boston, New York, San Francisco, Miami, and LA. And of course, many homeowners, who suffered job or income losses during the pandemic, keeping up with the mortgage payments, let alone home maintenance or upgrades, really became challenging last year. According to the Census Household Pulse Survey, 1 in 10 owners were behind on their mortgage payments by December of last year. And we know that that lower income households have suffered the effects of the pandemic much more so than higher income households. And even before the pandemic, more than 40% of owners reported no spending at all for home maintenance or improvements. Another 12% invested less than $500. And owners making little or no investment in their properties tend to be older, tend to have lower incomes and home values. And so certainly, thinking about the finances of struggling households post-pandemic, if we don't see improvement in the finances of these households, to cover the back mortgage payments as well as any deferred maintenance and critical updates to their homes, we can expect that the already large disparity in housing conditions between lowest and highest income homeowners would only increase. So the future of home improvement spending depends in part on trends in housing tenure and housing type. So a couple changes brought about by the pandemic that we think may persist for some time yet include increasing home ownership rates and elevated households. The continued flexibility of working from home, the desire for more space, both inside the home as well as outside, bigger lots and yards, households looking to reduce their housing costs by potentially moving to more affordable parts of their metro or other lower cost metros. If those locational and ownership changes do persist, we would expect to continue to see a boost remodeling activity from those changes. So the typical homeowner spends $3,300 annually for improvements compared to about $1,200 spent on the typical rental unit. So if 1 million homeowners, if 1 million renters rather became homeowners, we would think that would add about $2 billion annually to the home improvement market on an ongoing basis. And similarly, owners of single family detached homes typically spend much more on home improvements than owners of condos. And so again, if 1 million owners trade in their downtown condos for larger single family homes in the suburbs or the exurbs, we would also expect that to shift to add about $2 billion annually to the remodeling market over time. So ultimately, the home remodeling outlook is promising for 2021 and beyond. A few factors that we think will support increased remodeling activity in the longer term include the continued aging of our housing stock. Half of owner-occupied homes are at least 40 years old today, up pretty significantly from the last 10 or 20 years. Favorable demographics with the continued aging of our population. Owners age 55 and older currently account for more than half of all home improvement spending nationally. And we also have a large wave of younger households who are really reaching those prime ages for first-time home buying. And finally, I'll mention the rising number and strength of natural disasters across the US. So disaster repairs made up 10% of improvement spending in 2019. That's double its historical share. And according to NOAA, 2020 set a new record of billion-dollar disasters in the US. So all of these factors and others, we expect to continue to fuel growth in the remodeling market for years to come. I'll direct you to our website after our talk today to download the report, download data tables, view our interactive charts. And with that, I'll turn things over to Amy Scott from Marketplace to introduce our panel.
Thank you, Abby, and thanks everyone. Before we get started, I'm going to just briefly introduce our panelists. You can find their full bios on the center's website. And as I introduce you, please, panelists, turn on your cameras and microphones as well. First, we have Kermit Baker, the director of the center's Remodeling Futures program. which puts out this report every 2 years. We also have Caroline Blakely, the president and CEO of Rebuilding Together, which is a nonprofit that preserves affordable home ownership and revitalizes communities around the country by repairing and improving nearly 10,000 homes each year. And finally joining us is Fred Stokes from Lowe's Home Improvement, which is one of the country's largest home improvement retailers, where he is the Senior Vice President of Pro Sales and Services. And for those of you watching on Zoom, you can join the conversation on Twitter with the hashtag Harvard Housing Report. We may try to take a few of your Twitter questions later on if you want to send them there. And to dig into the findings a little bit, I'd love to start with you, Kermit. Abby sort of hit on this a little bit, but you mentioned, or Chris mentioned rather, what an unusual year this has been. And I'm wondering, how much of the recent growth in home improvement spending we can chalk up to those unusual and temporary conditions, we hope at least, of the pandemic, and how much of this might be longer term.
Well, thank you, Amy, and let me join you in welcoming all of our listeners here today. We did have both what I would call sort of one-shot projects that were undertaken last year that drove the market. I think generally, though, this was really building on a longer-term trend that we were seeing in the home improvement industry, and quite frankly, accelerating these longer-term trends we were seeing. So in the one shot, obviously, there were a lot of households that were modifying their homes to their current needs, their current lifestyle during the pandemic. So they were looking for space for home offices, for home classrooms, for exercise rooms, for playrooms, for outdoor living where they could comfortably sit and talk to neighbors or relatives. And they were kind of generally fixing up and sprucing up their homes with the extra time that they had during the pandemic. But I think the main takeaway is that this was really building on longer term trends that we were seeing in this industry. For example, a lot of home improvement activity last year was driven by the movement of younger households out of urban areas into suburbs, giving up their rental unit and buying a home. Now that's obviously something that's been going on for quite a while. In fact, we were wondering why it was taking millennials so long to kind of join the ranks of home ownership. And I think last year accelerated that. The attraction of living in urban areas was much more reduced, and the attraction of living in a bigger home on a bigger lot with more flexibility to modify your space in the suburb made a lot of sense. And we saw projects in the area of energy efficiency. We saw projects in the area of healthy homes, trying to reduce reduce toxic building materials and add to air and water quality issues and things like that. That had been going on for a while too. We saw a big boost in technology, home security, automation, monitoring. We saw a growth in accessibility considerations for older adults. So these were, all that list I mentioned were kind of niche markets a few years ago. They were existing, but they were niche markets. I think they've become more standardized now. And I think we can look to the pandemic as a way of sort of, accelerating their adoption, becoming more commonplace, I think, in homes across the country.
Okay. Caroline, a question for you, which is, Abby mentioned that low-income folks, even before the pandemic, were not spending very much, if at all, on home improvement. And the pandemic, of course, has affected that population the most. So people who can afford and have been working from home and have seen their home equity grow, have lots of money to spend. And not everyone is in that situation. So how would you say the pandemic has affected housing conditions for these lower income families?
Thank you, Amy, for the question, and thank you, Joint Center, for having me here on this panel. Unfortunately, you are right. Usually, even in non-COVID times, there's more deferred maintenance among low-income homeowners. Homeowners with incomes significantly below the average median income tend to own and live in homes that are of the older housing stock that need greater efforts to keep them up. And this is unfortunately true, most especially of communities of color. So currently we found that during the last year of the pandemic, low-income households in neighborhoods were disproportionately impacted by the economic downturn caused by COVID. Also, households saw an increase in the usage of the actual house, in that relatives moved in together to shelter together to save money, causing even more wear and tear on the house. As was stated before, many of our clients had and continue to have problems just paying their mortgage, much less having the cash saved to make critical repairs. So we've seen very hard choices in the last year, prioritizing food over medicine, over the leaking roof. The Joint Center's report actually highlights that 2.7 million households, or 3% of all the owner-occupied homes here in the United States, are moderately or severely inadequate, like lacking even basic safety measures. Unfortunately, studies have also shown that during COVID, lead poisoning is on the rise, and I think that's because children are home with lead paint. Asthma-related illnesses are on the rise because the triggers of asthma are still in those homes as people shelter. For my organization, 80% of the population that we serve are elderly people or persons with disabilities, populations that usually get really hard, very hard hit during COVID, and actually during the natural disasters that was cited before that causes a lot of remodeling to happen. Little problems with these populations get ignored. They're not fixed by the homeowners, and little leaks or little lack of safety precautions always cause greater problems in the end. And during COVID, repairs weren't made. Homeowners lacked the trust that the contractor would not bring COVID into their home, or there was such an increase in the price of materials that repair was beyond their means. But we see great hope in 2021. We see an increase in the focus of the importance of a safe and healthy home. We see money, both public and private, focusing on repairing and revitalizing our existing housing stock and having a greater impact on our existing homeowners.
Okay, thanks. I'd love to follow up on some of those issues, but Fred, I had a question for you, which is, you know, at Lowe's, you see this demand in your aisles and in your bottom line. Did anything surprise you from this report?
You know, first and foremost, thank you so much for having me as a part of the call and Lowe's overall. And to all of the listeners out there, thank you. And I know that you all have been shoppers of Lowe's, and we appreciate you for that. I think we served a really great purpose as an essential retailer to a lot of customers out there. And as you heard Caroline and both Kermit talk about stress on the home, when I think about the report, it really aligns very closely to what we saw in pro, specialty, and also services. You know, that said, there were a couple of interesting things that kind of I pulled out of it. And just from my perspective, and I'll go back to something Kermit talked about, it was the migration from urban to suburban, which was really interesting from the perspective of people relocating and moving and stepping in to buy their first home. You know, for a home improvement retailer, and having the mortgage rate so low allowed this to happen. And this transition really starts to begin a new cycle of home improvement projects. So you take that along with the stress of the home, and you just think about it. You're not, before you may have been turning your faucet on maybe 10 times in a day in a home. And now you have more people, additional relatives in a home, you're going to break the faucet. So it's now an emergency repair. A toilet is now an emergency repair. Appliances are now an emergency repair. So we saw that demand cut across really many different categories, which was, you know, customers needed it, and it needed to happen because they could not avoid those type of projects or repairs. The second thing that really stood out, I felt there was a tipping point where, well, I knew there was a tipping point where customers would not allow professionals in their home to make repairs, especially if they had one or more, they had 2 or more bathrooms. You know, you're not getting in my house to repair a toilet. But then there was a tipping point to whereas they could no longer wait for that professional to come in to the home. They needed them in the home. And that's why you saw things like, you may have saw the news reel of us rolling out Lowe's for Pro job site, where it gave a pro the technology to be able to walk the consumer through to repair a refrigerator or a toilet, or for them to actually get the dimensions or the specs on the type of project that they were actually working on. So there was a point where the pros started to work again, especially from an install and a services perspective. There was also a point where DIYers decided that, hey, I can do this. I can do this work myself. So a lot of people's fears and not wanting to do it, or money that they would have spent on a professional to come in, they broke those fears down. So I think that that's going to really play big in the DIY market, but I also think that it will play big in the pro market as well, because there's just some things that consumers will not do. I think the last thing that I will say, that no one and no retailer realized that we were going to have a safe program. So you may have seen commercials out there on a Lowe's safe program, but not only for consumers, but also for our professionals going into homes, making sure that they had temperature checks, mask on, and a COVID protocol, you might say. Those are things that retailers probably never even thought about prior to stepping in there. So those are a few of the surprises. Again, 2020 was just a year of millions of surprises, but for me, the report is spot on, but those were a couple of things that kind of surprised me as we went along.
Great, thank you. I think, Kermit, a lot of us are wondering how long this working from home thing is going to last. You know, many of us are making decisions about whether we're going back to our offices. But I know that had a big effect on home improvement and also home buying, people looking for more space. How long do you think those changes in that demand is going to last, or is this going to be kind of a one-time deal?
Yeah, I think that was one of the sort of the key social changes we were seeing, Amy, out of the pandemic was this, you know, working from home, and a larger share of the population working from home. You know, the research I've seen indicates that kind of pre-pandemic, we were seeing, you know, maybe 10% of the workforce that was primarily working remotely. I've seen kind of even the most conservative estimates indicate that will double in the future, you know, 20% or more. And, you know, and I think the question is, what does that mean in terms of home improvements? We talked about that a little bit already. You know, I talked a little bit about, you know, the need to accommodate space to support remote work. But I think another big phenomena of remote working is the mobility and the freedom of movement that you have as a result of that. I mean, if you don't need to go to the office, you have a lot more places that you can live. If you go into the office occasionally, you might not mind an hour and a half commute regularly, because you're not going in that regularly. If you hardly ever go to work, you could live almost anywhere. I mean, I've seen the term cloud commuting now, that you can, you know, all your information can be available and you can be anywhere. And I've seen surveys of households that say, well, since you can move, where do you want to move to? And where did you move to in some cases? And, you know, answers you see where I want to be near to my family. I want to be in a better climate. I want to live in a lower density area. I want to move someplace that's more scenic, maybe a vacation home, a vacation area, or buy a second home that I might move to eventually. But the number one response seemed to be, I want to move to an area that's more affordable. And I think we've seen a lot of that already. And that's what the map showed too, that, you know, younger households are moving to areas that are more affordable. And the implications of that, I think, are twofold. You know, Fred talked a little bit about, you know, deurbanization, you know, people leaving urban areas and moving to suburbs, exurbs, or rural areas. And that's clearly going on, but I think the big phenomena is not only that people are leaving urban areas, but households are not moving into dense urban areas. They're not replacing those. And so we have seen populations fall off. But the other big implication, and I think really significant for the home improvement industry, is that this mobility has led to a rising home ownership rate. Conservatively, it looks like we added at least 1.5 million new homeowners last year. That's a really big number. And you know, part of that is because they're moving to areas where there are more homeownership options. It may be difficult to find a place to rent in a suburb or exurb or rural area. Number one. Number two, as I said, they are more affordable, and you can buy something in an area you're moving to that maybe you couldn't afford to buy before you moved. And I think Abby did a great job of talking about, you know, what the implication of home ownership has to home improvement activity. Homeowners spend a lot more on home improvements, and if our ownership rate gets back up to what it has been historically, that's going to be a big boon to the home improvement industry, and that's something that pays back year after year after year. It's not, you know, undertaking a one-shot project to accommodate a changing lifestyle. Homeowners routinely spend more than rental property owners do fixing up their units. So I think that does bode well for growth for years to come.
Fred, I wanted to pick back up on the DIY market, which, you know, I think I was under the impression, which turned out to be false, that this millennial generation was more into DIY than they in fact were. And Abby informed me that actually the recent uptick in the share of DIY spending that was on DIY projects is a reversal of a trend that we've been seeing. I know you manage pro sales, but what do you think about that shift, and might that last beyond the pandemic?
You know, a couple of thoughts here. Even as the vaccines continue to progress, you know, I believe that there'll be certain consumer behavior that will sustain itself over the next year or so. You think about things like online shopping, you think about BOPUS, you think about curbside pickup. Those are things that I feel that are likely to continue as we move along. And retailers especially are really going to have to make sure that their technology game is together and their omni-channel game is together, because what customers are really, really looking for is ease to shop and quick to check out, no matter where you are. We were talking earlier a little bit about some of the experiences out there and just, you know, picking up merchandise from a store. So I think a lot of retailers have stepped their game up, and if they had initiatives with technology that were probably 2 or 3 years to roll out the strategy, those will move quite quickly, a lot faster. So I think that's going to be huge to continue to sustain the DIY market. The other thing that will come in that will create a balance is as additional retailers open up that were not considered essential. And then you also have smaller retailers that were struggling going into the pandemic that closed. You will start to see people travel more and get out a little bit more. And those that have and can afford it, they will continue to invest into the professional customer. The other thing with that is that there's a lot of things that are happening now where people, and I don't know if y'all read a Wall Street article probably about a couple of weeks ago, where there's an enormous amount of people that are really exercising their equity loans in their homes or refinancing. So why are they doing those things? During the pandemic, you could see a lot of tractors, bobcats going on the street, putting in pools, building backyards, siding jobs, roofing jobs, you just name it. Those are not DIY jobs. Those are pro customer jobs. So if that should hold itself up, you'll definitely see the pros continue to come back in an extremely strong way. The other part is the retailers that are exiting. And you think about not only from the DIY side, but from the pro side, there's a huge amount of market share out there to be gained. And hence why you see now we have a total home strategy. Whether you want to purchase sheets or whether you want your roof put on, Lowe's will be able to do those things because consumers are now asking for that. We just have to get more efficient about how we do it and making sure that we're doing the things that consumers need for their home today. So I do think that there will be a balance, and I think we'll get back to some level of norm. But DIY stepped up, and I think the pro is starting to come back pretty strong.
Caroline, is the fact that younger people are more likely to do DIY projects, does that contribute to sort of the gap in terms of household maintenance that you see? You mentioned that you serve more elderly and disabled homeowners.
Yeah, I think the gap with younger households that financially are capable of doing it and physically able to do DIY projects, and the customers that we serve, which are, as I said, tend to be elderly, low income, persons with disabilities, especially vets. They don't have the ability or the financial wherewithal to really do any kind of DIY project. So I see the gap widening quite a bit with the people that we serve. The people that we serve are very much trying to stay in their home so that they're not forced to go into a nursing home or a community living setting, especially with COVID. And they're also trying very hard not to be the subject of a hazard that exists in their home to send them to the hospital during COVID. So we're focused now as an organization on providing critical emergency home repairs so that people can shelter in their home, especially those in low-income communities. Lowe's is one of our great sponsors, and I know you were speaking about your pro training. You have been a great partner to nonprofits such as ours, Rebuilding Together, in helping provide these critical emergency repairs that cannot be done by the homeowners themselves, that need the contractor, the pro, to do it. And so we find that last year, 2020, we were really focused mostly on major projects such as HVAC, electrical, plumbing, roofing installations. Our elderly populations really spend very little on DIY. Less than 15% of the money they spend on repairs is done for those kind of reasons. They are really focused on the big things like the leaking roof or the crack in the foundation. We have a program called Safe at Home, where our affiliates around the country go out and locate communities and that are in need, and usually try to find communities that they can work in for multiple years and become a trusted partner to those communities. And the Safe at Home program really focuses on the things that are not DIY, but done by contractors, experts, that can really improve somebody staying in their home, like a grab bar or a ramp to get in and out, or wheelchair accessibility. These things are so vitally needed for my population to stay in place. And I think our affiliates are great at going in, looking at community leaders, looking for the community leaders, finding out what the community needs, and then going out and finding those homeowners that need our help. And sometimes one of our biggest problems is that trust factor, is getting that homeowner to actually trust that, yes, we will intervene and we will complete the repair. So younger families that we do serve, they often do DIY projects alongside a major intervention that we're doing. And whenever we see that, we get very excited because, of course, that kind of project just contributes so much to a greater commitment to the neighborhood, which can revitalize the community and benefit all of the homeowners that we're trying to help.
So Kermit, in terms of the conditions of the housing stock overall, we know that it's aging. There's not enough building going on. But how has the pandemic, given all these factors, affected the overall conditions of the nation's housing stock? And also, the Biden administration is talking about working on a massive infrastructure bill, which would include some investments in housing. I'm curious what you think the outlook is for that spending and how that might help.
Yeah, thank you, Amy. And let me amplify some of Carolyn's points too. I think she made some tremendous ones about, and just a terrific organization, but the ability to keep homeowners in their homes through some of these necessary repairs not only adds to the quality of life for those homeowners, but it really serves a key economic purpose too. It's allowing them to stay in their home rather than go to nursing homes or other places that are just much more expensive. And quite frankly, we're not, the pandemic wasn't a good PR campaign for nursing homes, I think. So I think there's growing concerns there. To get to your question about the condition of the housing stock and what has the pandemic done in terms of affecting conditions? I think that the quick answer is we don't know. But to amplify some of Caroline's comments, we do have some concerns. During the pandemic, it was surprising how different people in the country were separated into the have and have not categories. And you saw a pretty clear divide between them. So the haves were by and large upper income households that didn't see much of an impact on their income from the pandemic. They worked in industries that were largely not affected by the pandemic. They worked in jobs where it was fairly easy to work remotely, and kind of life continued as usual. Other than they couldn't spend their money on a lot of things they used to spend their money on, like trips and eating out and going to the theater and going to movies and other sorts of things. So they instead used that money to make investments in their homes. And I think a lot of the growth that we saw in the market last year was this tier of folks that were largely unaffected by the pandemic and had a little bit of extra savings around from things they weren't spending on. The other hand was the have-nots, generally lower income households working in the service industries. And it wasn't a small share of the population. The Census Bureau numbers indicate that 40% of owners in the country saw a loss in employment income in 2020. Now, I think the good news was that a lot of that loss in income was offset by the stimulus programs, the direct payments to households, the payroll protection program that encouraged small businesses to hold on to their employees, the enhanced unemployment insurance offered by the federal government. But still, in spite of that, and again, to kind of emphasize a point that Caroline made, 10% of owners in the country were behind on their mortgage payment at year end, 10%. And that number is well over 20% for low income homeowners. So, if you're not making your mortgage payments, you're unlikely to be doing any home improvements. And you're unlikely to be doing any routine maintenance. So, we're talking about households that live in really the most vulnerable part of the housing stock, I think. As you mentioned, homes are getting older. And those are homes that are more likely to fall out of the housing stock if they're not adequately maintained. And that would be really a pretty disastrous situation, given that we already have a serious housing shortage. And the biggest housing problem we have is not having affordable options out there, and really the inability to maintain homes at an affordable level for homes. Let me quickly talk about the Biden program, the Biden infrastructure program, which is clearly more than just a typical infrastructure program that designed to improve bridges and highways and water systems and things like that. Looks like it's going to be, when it gets rolled out, looks like it's going to be a pretty big program. $2 trillion probably at least, and I've heard estimates as high as $3 or $4 trillion. And it is covering things other than the traditional public works projects, as I mentioned, that there is an element to cover buildings and more specifically to cover homes too. A proposal to weatherize 2 million homes across the country, a proposal to build 500,000 and a half sustainable homes across the country. So I think that could really help to kickstart part of the program that we're seeing here, part of the problem we're seeing here, and build on other issues that I think will materialize. We talked about this sort of at-risk population that has suffered through the pandemic, that hasn't been able to make their mortgage payments. Luckily, they've been covered by forbearance programs by and large. But at some point, the government is going to declare this recession over and life back to normal. And these homeowners are going to have to make up those mortgage payments in all likelihood that they haven't been making. And if they can't return to their pre-pandemic employment opportunities and things like that, it's going to create a huge problem once we sort of move back to life as normal.
I wanted to turn to a topic that's getting some attention in the Q&A, and something I wanted to ask as well of you, Fred, which is supply disruptions. I did a story earlier this week about how the appliance shortage is slowing down building of new homes, but also certainly home improvement. Lumber prices are through the roof. Building materials of all kinds have seen disruptions and price increases. How is that affecting sales, and how is Lowe's sort of managing those frustrations?
No, that's a great question. And so, I don't believe that anyone really thought about supply chain network when we went into the pandemic. People were just looking for product, and they said they would go wherever they could find product, whether it was Lysol or whether it was lumber. No one really thought about commodities, the impact of that. No one thought about that on the other end, whether you were in China, Thailand, or wherever, that they also had COVID. And as a result, many factories were shutting down as well, and still goods had to flow. I think for those retailers that really planned and really got after merchandise, proved out to do well, especially if you were in home improvement. You can see where the sales are. So the inventory was there, but there were some shortages. And that's not only in retail, it's in automotive. Right now, there's a shortage on vehicles because of chips in some vehicles, especially the higher end vehicles. So there's a supply chain shortage across the board, no matter what product you're looking at, from a commodities perspective, whatever. So I think it's something that we will have to contend with for the years to come. And I think we learned a lot about our supply chain process, and I think we'll be better for across retail, and not just Lowe's, but our main competitors as well. Will be better from a supply chain perspective in how we flow goods and where we actually get goods from, because we still had the problem domestically as well. So there really weren't, if you look across the board, you say, okay, well, which products from a demand perspective were people really, really going after? I would say all products, okay? But the ones that were really surprising were like the PPE. No one thought that Lysol would be one of the #1 sellers, or, I think about toilet paper and paper goods, lines outside a door for things that, products that, were not in such high demand. It was just a normal consumable product that you would pick up. It kind of took you back to the Depression days. And now I know what my grandmother was talking about back in those days because of what happened. So I think we weathered the storm, but I think retail across the board and in almost every industry will be better from a supply chain perspective, because we actually learned a lot about it. And we learned that the impact was far and great. But how many times do you go through a pandemic such as this one in life, or a war, or some major disaster that impacts the entire world?
And Amy, if I could just jump in briefly, I was talking to some members of Fred's team a couple of weeks ago that were dealing with the situation in Houston, the storms down there, and talk about supply chain issues from the pandemic. I think natural disasters even exacerbate those pretty tremendously in terms of trying to get product and materials into those markets and to those households that need them during an event like that, on top of everything else that's going on.
And you know, that's a great point, because in actuality, we're used to dealing with hurricanes, tornadoes. I mean, we have war rooms. We really go after those things. We know how to do it. We know how to flow merchandise. That's the norm in home improvement. But when you compound that along with the situation that we were in, then you have really stressed the supply chain across the board, which is what happened.
And then you add on top of that, on the low income side, they're really relying a lot on the goodness of contractors, sometimes to offer free services. With a place like Texas right now, you know, they're all pretty busy working. Yeah,
and I think that's another point that, you know, we probably haven't paid much attention to. And you saw Lowe's come out with grants through LIST, where we gave, I mean, a tremendous amount of money, over $100 million to small businesses. You saw the Shark Tank for small minority-owned businesses and so forth. Keep in mind, these professional customers, especially when you think about pros that are under that 10,000 and below as far as their yearly spend, these are small businesses. And these are the people that are making those repairs in homes. And so we, as a big business, we have to do our fair share. And I think you've heard our CEO, Marvin Ellison, really put our flag down that we are here to help these businesses, even though we're in competition with some of them, because we know that the success of the entire United States and our country is small business. So we have to help them somehow, some way, because those are pro customers as well.
I just keep thinking about how much more spending we might have seen if it weren't for these delays, you know, delays not only from product shortages, but labor shortages. Everyone on this call that I talked to before knows that behind this screen is a leaky roof that we've been waiting 2 months to fix. So I'm living this story. I guess, Kermit, you know, we mentioned, we talked a little bit about home equity, rising home equity, and I'm just curious what we know about how people are paying for all these projects. Are they borrowing? Are they spending savings? Are they, you know, refinancing their mortgages? We haven't seen the kind of cash out refinancing that you might expect, but is that going to become more tempting to folks as home prices and therefore equity keep rising?
Let me start, Amy, by saying I'm sure Fred can put you in touch with a contractor who get
Fred,
out.
help me out. They're supposed to finally come next week.
I can help you out today, and I can also get you credit.
There you go. There you go. If we've done nothing else on this call, we've
made a sale.
Let's talk about something less exciting though, Amy, like financing home improvements. You know, traditionally, the number one source of paying for home improvement projects by a wide margin is cash. This is an industry where approximately 2/3 of financing is from savings and cash. And I think that historically has been a huge impediment to industry growth. I mean, what would the US housing market look like if you relied on almost exclusively on cash to buy homes? What would the US automotive industry look like if they relied on cash to buy cars? But in remodeling, that has been the case. So you know, it has been a huge obstacle. I think during this pandemic, probably not so much. We talked about the savings that folks have realized, that, you know, the increase in savings on households because they can't spend money on other things. You know, there are estimates that we have an extra $1.5 to $2 trillion in savings generated in 2020 because of that phenomena. And some of that is being used for home improvements now, and some of those that'll be used for home improvements later this year, and some will be used for home improvements as we move into 2022. In addition to that, as Fred mentioned, we've seen pretty dramatic growth in home equity credit lines, in cash out financing. Low interest rates have been a kind of a boon to doing that. So I think, I think there are lots of opportunities. I think this sort of reliance on cash that has been a huge impediment for the industry, at least in the near term, is going to be less of an impediment. I think while we're kind of awash with money now, that probably isn't going to slow down much home improvement activity. What's going to slow it down is we can't get the labor and we can't get the materials to get a project done, even if you can afford it, and that's a different problem.
Caroline, you help so many elderly homeowners adapt their homes to aging, and we have increasing demand for that, given that most homes have not been adapted for aging in place. What kinds of options do people have for accessibility so that they can stay in their homes and not have to move into a facility?
Well, luckily, there's a lot more education about that is out there now as well, and a lot of companies that are focused solely on talking to families about what they can do to modify a house. So we're lucky to be the beneficiaries of partnering with a lot of those companies and actually finding that homeowner that needs to have that home modification done for free by a nice, generous donation from a lot of these companies who are doing it. I would say one of the most successful programs that we're doing right now is relatively inexpensive, and that is really, we call it Modification Express, and that is really just focusing on grab bars. It's simple. A contractor should do it. You need the expertise to make sure you put the grab bar in the right place. But if you really put grab bars in someone's home, it gives them the safety and the sense of safety. So we've conducted a lot of surveys of the impact on people, not just the outcomes, but actually how do people feel after we intervene? Have we made their lives better? And it's amazing what a grab bar does, because you just get this feeling of being able to move around your house in a more safe manner and therefore willing to live there longer. Same thing, simple, which a volunteer can do, is just get rid of trip hazards. So just, getting rid of something that could cause you to fall, which is the #1 problem of elderly people staying at home, is fall hazards, because usually that leads to, longer term health problems. So we do a lot of ramps, we do a lot of bath and kitchen modifications, but two simple things are grab bars and trip hazards. And trip hazards, every family can do for themselves. They can educate a little bit what it is and do that for their elderly relative, and it will make such a big difference.
So a lot of these things aren't, in fact, that expensive.
No,
sounds like.
No, grab bars they're relatively cheap to do and make a big impact.
So an interesting question came up a couple times in the Q&A, which is, given the eviction moratorium, the CDC moratorium on many protections in states and localities, has that prevented property owners from making investments and improving their rental properties? And any of you who have an answer to that are welcome to weigh in.
I think at the onset of the pandemic, it was an issue, but I think probably 5 to 6 weeks in, they continued to work and they came back. The repair remodeler started to come back, and we saw it in projects. And I think across the industry, it was seen. So I don't think anything stopped. And I do believe that there will be a point as people start to get vaccinated, and then they start to enforce a lot of evictions and different things of that nature. I do think that business will start to even start to pick up a trend as far as spend as well on certain products, drywall, paint, you name it. So I think there's more to come with that one, but we saw a small dip in the beginning, but then it picked up and it got back on pace with our current trend that we had seen the years past.
And Amy, if I could add, I think,
Yeah.
the story's still to be told too. I mean, I think we will see once we're out of this, how much deferred maintenance there really has been on rental units or owner occupied units too, that really hasn't come to light, but will once some of these issues kind of get resolved.
I know I spoke with a small landlord who still had to replace the washer and dryer for a tenant who wasn't paying rent. So if they're upholding their end of the lease, some of that spending is happening regardless.
Yep.
Yeah. Well, tell them Memorial Day is coming up, and typically there's a nice appliance sale at Lowe's. So let them know that.
You are a salesperson, aren't you, Fred? I can tell you're good at this business.
Brad, I think you have to fix her roof before she gives you a plug.
I'll take the roof over the appliances.
Right. Well, one thing a lot of folks in other parts of the economy are talking about is all the pent up demand that may be released as more people get vaccinated. And I'm wondering, given that a lot of that demand was accelerated by people staying at home, what's the outlook? Are you thinking that you will benefit from some of that when people are more comfortable going out and spending? Maybe as more people come back to full employment and have money in their pockets, is that going to keep this home improvement spending going?
I think it will be. And I'll just use myself as an example. In my generation, I had never been through anything like this before. And, did we make some investments? Absolutely. But it was to like a gym, so I no longer have a gym membership. So that will continue. And I realized that I could use my home for more than what I was probably utilizing it for before. I think about my wife and I were constant moviegoers. I don't need to go to movie like that anymore. They now have HBO Max, you got a little bit of everything, Hulu, you name it, Netflix, you name it. I'm not gonna mention one retailer, but it's one of those things where I found a place where I can do the things at my own home. And so I believe that people will continue to pay attention to their home, while at the same time, they will travel. They will start to have vacations and such before, but they will probably not go back the way that we were. And that's only normal after a situation like this. So I still see that the spend from a home improvement perspective will be there. It definitely won't be at the pace that it was in 2020. But I do believe that to be in a home improvement is a really good market. And the fact that this is an essential retailer, I'm just happy that we could really be able to serve customers during such a tough time that they were all going through, whether it was a repair or whether they wanted to do an addition or whatever. And I never thought that we would be used that way, but it happened across the home improvement industry.
And I think, go ahead, Carolyn.
I think from my perspective in working in the low-income communities that we work in, I think with the emphasis also on the need for social justice and equity, I think there's going to continue to be a desire, demand to keep investing in these communities. I think even though the housing stock could be old and you have a lot more relatives living with you, I think the importance of family has grown and people are now used to and want to be with families, with their communities. And really, I think it's only going to continue the investment in the existing housing stock.
And last word to you, Kermit.
Ooh, that's a heavy burden, Amy. Yeah, I think to kind of amplify what Caroline and Fred have said, that life is going to be different, I think, post-pandemic, and different in ways that we don't fully understand yet. But it is going to be more home-centered, I think. I think there's going to be more emphasis on doing things in your home, having family members in your home. We've seen more sort of doubling up in multi-generational households as a result of the pandemic, and I think that's likely to continue moving forward.
All right, well, thank you so much for the discussion, and to everyone who joined us virtually. We really appreciate it. Caroline Blakely from Rebuilding Together, Fred Stokes from Lowe's, Kermit Baker from the Joint Center for Housing Studies at Harvard, and Abby Will and Chris Herbert, of course. The full report is available on the center's website, and you can keep the conversation going on Twitter if you want with the hashtag Harvard Housing Report. Thank you all so much, and enjoy the rest of your day.
Bye-bye.
Bye.
Bye-bye. Thanks.